So the 2021 hurricane season is upon us.
And we have a guest coming on today that's just simply going to blow you away. Hello everybody, my name is Barry Horvath and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us today. So welcome to the 2021 hurricane season.
Wow.
All of you, I know, all of you who've lived here for a while and those who are just moving to town, so that you know, June through November is what's known as hurricane season here in Florida.
Wow.
And the news is all talking about it, like being prepared and, you know, have your little hurricane kits. And they said this morning people have their little COVID kits.
Right. Now they have
they called it a pandemic kit. I didn't know there was such a thing.
Right.
They're thinking that could be their hurricane kit too, but no.
Well, maybe. They're predicting, from what I understand, from all the experts who know all this stuff. And who are the experts anyway?
We know one.
Yeah. They're talking about the number of storms that could possibly come through. It seems like maybe it's media now, maybe you hear more about it, maybe it's faster information, but don't you think that like you hear and see more about, doesn't it feel like there's more worldwide?
Oh,
overall,
yeah. The news in general.
Yeah.
The news in general.
Because let's face it, you hear about it because bad news
sells. Travels fast,
yes.
And people all want to hear. And hurricanes is bad news.
Yes, and we all
wants
know.
to hear about disaster. Why is that? We are a sick nation.
Yeah, we are, and we are in one of the hottest real estate markets that we have been in some time. And I know I'm preaching to the choir out there when I talk to you all that are out buying houses, but people need to understand the impact of insurance on buying a house. And we'll talk later on a future show maybe about the impact of your buying power. But right now, we want to figure out what the heck's going on in the industry right now, because we're seeing a huge increase in premiums. And with being here in hurricane season, we wanted to bring in who we think the best, our expert, and the best of the best. So today we are going to have a special guest join us, and we're going to pipe her in. This is exciting for me because we actually got to see her, and it's been a long time since pre-COVID. So today our guest is going to be none other than Angel Cook with Leaders Insurance. So. Welcome, Angel.
Our very dear friend as well. I know we finally got to hug her neck when we met in person at one of our mixers. Yay!
It was so nice.
I know.
Angel has been in the insurance industry for 20 years now. So I said she started when she was probably like 3. So she was at VPK, going in, getting licensed and getting trained and learning about our industry. So we wanted
Well, the other kids were learning how to color.
Yeah. Or just simply be potty trained,
Angel was getting her insurance license.
So welcome back to the show. It's been a long time since we had you on, and we thought we could Zoom you in because we know you are super busy right now. So we thought it'd be a great time to bring you in with, like DeLynn said, it's hurricane season, and we want people to understand those coverages, and we want to know what the heck's going on with premiums and why people need flood insurance, don't need it.
Regardless if you are in a flood zone or not, right, Angel?
Remember, DeLynn, everybody's in a flood zone.
That's very true. We are in Florida. We are surrounded on 3 sides by water.
So, our first-time buyers, and we have a lot of those that watch our show, need to understand, and I know our real estate partners know this, but when you purchase a home, if you are getting financing, insurance is required. There's no way around it, and people are like, what? Most people escrow it, so it becomes part of their payment, but insurance is required. And some homes are in a flood area, and we want to talk about that a little bit. and they will require flood insurance if they're in a flood area in order to achieve financing. So Angel, tell us what's going on and in the industry right now. Why are premiums going up? Can you touch on that a little bit?
I actually can. It's not great news. I wish it was a shorter term process. We're seeing higher rate increases than we saw back in 2008. 2008 was the whole, through 2006, 2008 is kind of when it capped off, and all insurance companies pulled out of Florida due to the sinkhole crisis. And so everyone ended up in Citizens Property Insurance because of that pullout. There was no other insurance company that was writing. Rates were very high. We have exceeded that in 2021. We are seeing industry high rate increases. And so there are two main factors for that. Believe it or not, just two. Hurricane Michael that hit the Panhandle, $7 billion in insurance premiums were paid out for claims, and there are still millions left to pay. So imagine you as a policyholder up in the Panhandle and you still haven't received your insurance premium. And so look to your left and look to your right. All of those people that are paying insurance premiums, it's coming from them. We're all putting into that pot. And so that's where that money's going.
So did you say $7 billion has been paid and there's still millions to still be paid out from Michael, which was a couple of years ago, right?
That's right.
And people still don't have their money.
Why is it taking so long? Sorry, but...
They're out of money.
I do know they're out of money. And so, we have to think of it as a business. You own a convenience store and all of a sudden you're completely wiped out. Everything that happened, not only did you suffer a fire, but then you rebuilt and so all this happens, right? And so you take all your life savings and you still have expenses and you try to rebuild your store, right? Insurance is a business. I know people don't like to hear that, but it's a business. If your convenience store is in a bad area and you're theft and you can't control it and then you get vandalized and you're constantly putting out, you either have to raise your prices inside the store, right? Or you have to shut down. That's what's happening in the state of Florida. What people don't understand is that the state of Florida, insurance is a pooled risk. And so I pay my premiums, Barry pays his, DeLynn pays his, John pays his, everybody pays into the pot. Think of it as we're all putting it into a savings account, okay? But then you hear on the news of a house fire, and that house was insured at $250,000. But the homeowner just bought the house last year, and they paid their insurance premium for the year, and it was $1,200. Where do you think that other $243,000 is going to come from? All of our premiums. So we're all putting into the savings account, and one house fire takes $250,000 right out. Okay, how are we going to make that up? Because wait a minute, the next day, somebody suffers a wind claim and they lose their roof. They paid $1,500 for their homeowner's insurance, but the roof costs $12,000. Comes out of the savings account. There it goes to them. Here's what people don't know. State of Florida is the only state in the United States that we have our own savings account. We're not sharing with the other states. So Georgia, Michigan, California, Texas, they all have one huge 49 states paying into a savings account. Again, I'm just using this as an analogy to kind of put it into terms, right? So we only have the state of Florida. I try to make it so we're just picture it. If
I feel like I'm in VPK, but I'm getting it.
If we only have Floridians, people who have insurance in Florida, we're the only ones paying for Florida claims. But Michigan has California paying and Colorado paying and Arizona. They have a lot more money in their savings account. We are separate. We are the
How come we're
only
separate?
state. Hurricane Andrew. Hurricane Andrew in 1993 wiped out all of South Florida, if you remember.
Yeah.
Insurance companies lost everything. So all the other states were like, well, wait a second. We all pay, our premiums are all going up because of a state that we don't even live in. And so we were basically kicked out. Okay. Now, I'm not going to lie, in 93, I was in high school, so I don't know all of the facts. Okay. But, but that's what basically happened. They were
Wait a
like,
minute,
wait a
you were in
second.
high school in 93? I did the introduction totally wrong. I was off of my years. Wait, let's go back. I need math.
Wow. So they kicked us out. And they haven't let us
didn't
back
know.
in all these years later?
In all those years later. And I do believe that it's the fact that nobody's fighting for us. Once they separated us, if anybody looks at their declaration page, you will see of Florida somewhere on there.
Wow.
So even if you have State Farm or Allstate, which are mutual large national companies, it will say State Farm Mutual of Florida. Allstate Insurance Company of Florida. We are paying into a separate pot, so we don't have the premiums to be able to pull. And so that's our number one thing is when we have a large hurricane that hits, it's not just that area that it affects all of us in Florida. We all have to get that money back.
Wow.
Wow.
Second thing is when you drive through a neighborhood, pick a neighborhood, any neighborhood, here locally, what do you see most in the yards? Roofing signs.
Mm-hmm.
Right.
Because you know why?
They're all over.
Knocking on doors.
They're all scamming people to get new
They're
roofs.
scamming.
Yeah.
And so what's happening is, and I have had this happen weekly in my insurance agency. Hi, Angel. I need to place a roof claim. I had a roofer say that my neighbor had hail damage from a storm in 2018.
Yeah.
Please keep in mind, it's now 2021. You have no damage. You're having no loss. You have no water leaks, no concerns. You just want a new roof. And again, remember, in the last few years, insurances have been anywhere from $800 on average, $800 to $1,500 a year on average, especially in the Newport Richey, newer home area. Right. Okay. And you pay that for 2 years in a row, and then you place a $15,000 roof claim. You've only paid in $3,000, the very most. So where do you think that money's coming from?
Yeah.
So that's great. You got a new roof, and you got a new roof, and you got a new roof.
But don't they have
now
to
we're all
prove
paying
it? Don't they have to prove, like, and I've seen these scams going on with, one of my clients said to me that somebody told that they came and knocked on his door and said, I can get you a roof for free. It's not going to cost you a dime. It's a roofing company, and we can get it for you for free. And now you just said, hail damage. But don't they, from, 4 years ago, don't they have to prove that?
So here's the big deal. Yes, they have to prove it, but it's very difficult to prove at the same time. And so what they're doing is when they door knock and they say, your neighbor had damage, I'll get up, free consult, get up on your roof and look. They get up on the roof. God love the honest contractors, but unfortunately there's not as many of those. And then they pull back the shingles. They're using a crowbar and pulling back the shingles to make it look like wind damage, or they're using a small hammer and doing the holes in the shingles.
Oh my gosh. So they're intentionally ruining the person's roof so they can get a roofing job, and the insurance companies, we all are paying for it.
Absolutely.
So
yes.
Isn't that,
we're all paying for it. It's a problem.
Isn't it a criminal offense to do that? I'm sorry. That's just,
Yeah, I'm sure.
And I've had
It is.
They're going up
'Cause
in my
that's
neighborhood
theft
like crazy.
from the insurance companies.
I had one of my neighbors say, "Yeah, I just got a roof for free. You can get one
See?
too."
Yes.
Or I paid
Right.
$2,400 for a roof, and we have the roofs in our neighborhood are $17,000 to $20,000.
And those are the same people, I hate to say it, those are the same people that are going to complain to you, right, when their premium goes up. Oh my
Absolutely.
gosh, my premium went up.
But-
Well, what did you think?
How do we fix this? It sounds like this
This
a
is
crime.
horrible.
So it is horrible. Right now, there is our insurance representatives are trying to fight it in the state level to get the contractors under control. The problem is proving it is very, very difficult. We have to catch them in the act. I don't know how we're going to stop it. So what's happening is the insurance company has to, all the insurance companies, right? You have to protect your business. If you get robbed, you put in an alarm, right? If you get fraud, yeah, you have to protect yourself against fraud. Again, it's a business. And so insurance companies are changing their guidelines before they're taking a risk. And it's very difficult right now in the insurance industry because not only are people taking these astronomical rate increases, it's just horrible, but they're also being canceled. They are also limited in shopping around. I have a lot of different homeowner companies, but now out of my 15 insurance companies that I have that I can shop people with, there are only 2 that will accept a roof, a shingle roof, at 20 years old. 2, Citizens, the state insurance company, and Universal Property and Casualty. Those are the only 2. I have one company that went down to 5 years. Your roof has to be 5 years old or newer.
Oh my God.
Or they won't take you. All the others have changed to 10 years.
Wow.
Or newer. And so they're managing their risk. And, that's really tough. When you have a house that is a newer build, you have a house that's built in 2007, and then they don't qualify for a good company, you wouldn't replace the roof. It's fine. But now they have to go to Citizens or Universal, which Universal is a good company, but still their options have been absolutely slashed because of this. And that's what's happening. Now, I will tell you, the people who have claimed roof claims have put themselves at risk too, because if they're non-renewed, they will only be eligible for Citizens because now they've had a claim and it's been over $10,000.
Wow. What if you just said that, some people, you have to have 5 years or newer. What if when they bought the house, there was like a warranty on it or something like a, 30-year warranty, that you buy those 30-year warranties?
The warranties don't mean anything to insurance companies. They mean nothing.
Really?
Yeah, they mean nothing. Most of the time, those warranties are for product malfunction. If the product breaks down incorrectly, if the quality grade, something happens there. It's not for damage, for a covered loss.
Wow.
Yeah, it's most of those warranties do not warranty against wind and hail and storm.
And what is the average time like a roof is, good? Like, is it 20 years? I know in Florida it's shorter than it is up north because of the heat.
It is. So like 30-year shingles, when they say 30-year shingles, in Florida, they're 20. If it's a 25-year shingle, it's 15.
Okay.
It also has to do with how they're laid down. And so if you have what we call a standard shingle, composition shingle, it's just a 3-nail tab shingle that goes down and they go from bottom to top, down. But the architectural, which is what insurance companies like, is where they're overlapping.
Right.
And so there's some protection there. Typically, the good roofers, which thankfully we do have them, when you get a new roof, they automatically quote that architectural lay. So you're going to get that better quality shingle that is going to be laid over top and give you that better protection. Obviously, that's way better against wind damage too, because it's going to be harder to lift those shingles up because it's more like a solid layer, right? Other than the 3-tab where they're each layer is exposed, each shingle is exposed to that potential. So the architectural is definitely the better way to go. And we actually look for that when we quote a home. We go on Google Maps and we look at the aerial shot to see if it's composition, shingle, tab, or if it's architectural.
Wow. She's beautiful and she knows about roofs.
Yeah. Smart girl.
More
smart
about
girl.
roofs.
You know what? I have to
Most
tell you-
women.
Most, right. You know what? I love your analogy about the risk pool for insurance. You put it in simple terms. Because I just equated this to, I'll tell you something that happened, true story. Much smaller scale than what's happened with the hurricanes. But my complex, where my office is, we have 4 buildings and we each share the common ground. So we all put into a pool of money called the HOA, which I've been promoted president for the last, 15 years, whatever. And we all put in money. We just guess at what the expenses are going to be for the year. And we all share in those expenses, electric, water, and every once in a while, something happens that you don't know is going to happen, unprepared, just like when you live at home, your budget. We had a water pipe burst
Underground.
underground. Okay, 300,000 gallons of water.
Because nobody knew it happened.
Nobody knew it
was like
happened 'cause-
probably about a week.
Yeah, I mean,
It
we had a
was-
little bit of a water pressure drop, but we didn't.
But no one thought much of
Nobody,
it.
knew this water is gushing underground.
Underground, and we
had to
didn't
get
know
a
it.
leak detection company, and they found it, and it's been repaired. But our water bill, oh my gosh, the first one was like $5,000 for water, and of course, you can fight and get some adjustment for the sewer, but it wasn't much at all. And then the next bill, because it overlaid, was $3,200 because they split. But nobody knew this was happening. So now picture this: there's 4 of us homeowners. We have an extra 8, and then we had to pay for the repair. So call it 10 grand in expenses for this one little that nobody knew was happening.
Taking
So-
it overdrew your savings account.
yeah, so I had to go to the other owners and go, look, here's what's going on. We spent all our money, we blew the budget, kind of like you said, we all need to step up and pay a little more right now. And they're all like, wow, that's not fair. I'm like, well, what do you want to do? Do we want
Right.
to shut down and not have an association? But it's the same thing with insurance. It's a risk
Yeah.
pool. We all contribute, and we all hope for the best, right? And
Yes.
insurance
Yes.
companies need profitability. They need to be solvent, or they're not going to
Yes.
be there, or they wouldn't do it. And their risk is things like that. They're there to
And now
repair.
with floods coming, does that make things even riskier? Well, hurricane season, so
So-
roofs are going to go, trees are going to fall onto roofs, and floods, right?
Right. So I want to just touch real quickly on the whole tree that you just brought up. Just for those watching, especially the first time home buyers, because they don't realize this, your tree falls, hits your neighbor's house, you are not responsible. Your neighbor's homeowner's insurance pays for that. If your neighbor's tree falls on your house, your insurance pays for that.
Right.
So that's very important. So if it's a storm and it's beyond their control, okay, it's a little bit different when it's negligence, but even still, it's hard to get that money. Your insurance pays for that fallen tree. Okay, so just real quick note on that. On flood insurance is a different animal, which in a way is really good. Every single agent, it doesn't matter which insurance agent you call, we all use FEMA. It is the government-run flood program. So my quote here in Florida, Pasco County, will be the same quote in Georgia, in Michigan, and
Oh.
it doesn't matter. And we all pay into that one huge big pot for
Okay.
flood.
So FEMA hasn't
So-
kicked us out like the other
No.
states
That's
kicked
right.
us out.
Probably
So
'cause they
that
can't.
is one good thing. We are part of that. Now, on a side note, just a few years ago, the government did allow private companies to sell private flood insurance. It's a very small market for that. I don't recommend it most of the time, but I'll tell you, I've written a few of them simply because it is to the benefit. Say a house is in a V zone. A V flood zone is the highest risk flood zone you can be in. That means you are on the water. You're on the water. Whether it's the Atlantic, the Gulf, you're on the water, okay? And you are the most likely, A, to have flood, but B, to get the worst surge, which then, of course, higher the claim possibility because you're probably going to be more catastrophic loss, right? So you're going to have the highest cost. But let's say your house is built, you've been living there, and you want to enclose that bottom and make it living space. You cannot do that in a V flood zone. Cannot. So then you go to sell the house, and the person who wants to buy the house has to get flood insurance because they're going to have a mortgage. Now that flood insurance cost is going to be thousands because the structure has been changed and they have enclosed that bottom part that's supposed to be open to allow the water to flow through and not put pressure on the home. Okay. And so when that has happened, you can't afford a policy through FEMA. I can go through a private third party. It will still be expensive, but it won't be as expensive. And we can bypass the elevation certificate that shows that the structure has been altered. Okay, but again, and not ideal. You don't really want to have to do that. So with flood insurance, yes, the prices have gone up, but very slowly. And only in the last few years. FEMA went quite a few years with no rate increases at all. And because we all pay into that national savings account, right, we don't see those rate increases as much. Now they are trying, ever since Tropical Storm Debbie came through, FEMA came back in because 70% of those flood insurance claims from Tropical Storm Debbie in our area, in Pinellas, Pasco, and Hernando, they came from people who are not in high-risk flood zones, meaning they had a mortgage and they weren't required to carry flood insurance. They were in what's called a B, a C, or an X flood zone. And so their mortgage companies didn't require them to carry flood insurance. They misunderstood that as I'm not in a flood zone. They got flooded, and very badly. I mean, these homes were, they were very damaged.
Which is
When
why
that
we
happens-
should tell people, get flood insurance regardless.
Yes, absolutely. So what would have cost them about, on average, $300 to $400 a year to protect themselves against flood, ended up costing them $20, $30, $40, $50,000 in repairs. Because everything had to be ripped out. Everything had to be ripped out. And the drywall that's wet, you have to go, I think it's a foot above where the last watermark is to prevent mold. And so FEMA comes in when an area like that, a large area like that, floods, and it's unprecedented, and they were in a non-risk flood zone. FEMA comes in and they rezone and they redo the maps.
Wow.
And so that is what has happened. So since 2012, FEMA has been coming in to these counties and they're rezoning and they're remapping. And so
Wow.
that changes too. And so people who, fun fact, if you were in a non-high risk flood zone and you get changed over to a high risk flood zone, you are grandfathered in and you get to keep that cheaper policy. But if
Wow.
you never had a policy, you're not grandfathered in and you have to pay the higher one.
Angel, so much information. Thank
know,
you.
sorry, I
It's almost
talked a lot.
overwhelmed. Oh, it's great
I
though.
loved
Thank you.
this. I know.
Hey, thanks so much. We got to have you back on. It's Angel with Leaders Insurance. So much information.
Thank you for joining us. We'll talk to you soon, hon.
Yeah. Hey,
Boy, that
what
was
great
good.
information. So, hey, thanks for watching
love
our
her.
show this week. Make sure you share us, like us, get us out there
We appreciate you guys watching. We are Today and Every Day.
moving forward.
See you next week.